This is Tim Justice from TackleTrading.com here to provide a market update on Wednesday, January 14th. It's in the evening here. It's about 6:45 my time. I live in Mountain Standard Time. Markets are closed. Banks are closed. Well, at least they are here in the United States. The Japanese banks are open. The Australian banks are open. Those are two large money centers for major currencies, and that will drive volatility. We do live in a 24-hour market. As you can see, here we are at TackleTrading.com, and we're going to use the Trade Center tab for today's market update. If you're not using the Trade Center at this point, I would highly recommend that you do that. Go in there every day, learn to use all of the tools that we've built in there. They're very valuable for new traders as part of your daily routine. Now, let's start with the news itself. In the News tab, you'll see a stock market update. It'll give you some of the numbers. The Dow was down 186 today. It's a little bit over 1%. The NASDAQ, 22 points, about 0.5%. The S&P 500, down 0.5%. Now, Coach Gino on the Coaches Show that we provide for our pro members on Tuesdays said just as he got on there, and he had to go a little bit early, but he's saying that, hey, guess what, guys? The market's probably going to be down 200 points tomorrow. Well, Coach Gino, quick shout out to you. It was only about 13 points off of that, but I believe that was a very, very good call. Stocks retreat amid persistent growth concerns. Let's talk about that. We'll go through that in just a minute. Want to hit the highlights here. World Bank lowers 2015 GDP target to 3% from 3.4%. And copper futures plummet because of it. December retail sales miss expectations. JP Morgan was reporting below consensus results, and the S&P 500 looks to hold the 100-day moving average. So there's some technical levels, there's some international news concerns that are driving the market. Let's get this last article here. The major averages endured their fourth consecutive decline, so the markets have been down 4 days in a row. Whenever you start to get that kind of a swing move, and we'll go to the charts, it can create some technical pressure, and that's what we're experiencing right now. Equities face selling pressure. The lowered outlook pressured commodities. We've seen that. Now, crude oil is trying to find itself. I had a trade on crude oil that I closed out on Tuesday for profit. I was bearish on and pulled it down. Feel like it's at profit-taking levels at this point. Other people may have different opinions, but that's what I was looking at. And it traded in crude oil, however, traded in the red during morning action, but rocketed into the pit, into the close. So it's showing strength intraday. We're going to go look at those oil charts in just a minute. Financials. This is an area of the market that I've been watching very closely. They inched away from their lows during the afternoon action, but could not catch up to the broader market, okay? And which was also the case with the consumer discretionary. So financials have a lot of pressure. And I believe there's some carryover from fourth quarter, earnings numbers that are going to be reported tonight, tomorrow, and Friday. You'll see a lot of information regarding the financials. And that carryover, to me, is going to drive through the earnings season, create some volatility. I believe they're a volatility risk right now. Now, let's move past the news. Let's look at the economic calendar. Let's talk about what's in front of us in the morning. And here we are, Wednesday, January 14th. Here we were. Thursday, tomorrow, there's some bond auction settlements. Jobless claims, that happens every Thursday. PPI number, none of this stuff really stands out. The Philly Fed survey, anything to do with the Fed can drive the market. That's 30 minutes after the market open. Nothing really stands out to me. Industrial production on Friday can be a big mover. The CPI on Friday as well. But really the planned economic data is not driving this market right now. Technical volatility is. So let's look at the futures tab. Now, we put this here not because you have to trade futures, just because a lot of traders actually watch the futures charts as indicators. Now, let's start with the daily. Here's the S&P 500, head and shoulders pattern that Coach Noah had identified in the Coaches Show, putting pressure on support. NASDAQ 100 is in a very similar pattern. It's kind of a compression pattern up here. Russell 2000 is sitting in the middle of this volatility pattern. It's been developing for months. The market is really at a standstill from a pattern standpoint. And then the VIX, Volatility Index, which is used really heavily by option traders, You see that it's spiked up and it's bumping its head right here, you know, kind of resting at the highs. What it's all pointing to is that next week's, the rest of this week and next week's earnings are going to have a great impact on the direction of the market. The technicals show compression. They show slowing momentum, which can lead to bearishness, but it's no guarantee of bearishness. Really what it is, it's opportunity. It's opportunity for volatility that you can take advantage of. Let's take a quick peek at the energy sector. Crude at a low, trying to bounce off the lows here. Heating oil, same thing. Nat gas had a nice little rally off the lows in here. Metals. Oh, gold has had a couple of good months, you know, after a couple of years of disappointment. Silver is sitting at a high point. Copper plummeted. That was in the news. We read that earlier. Platinum at a high. Palladium. Let's look at the bond market real quick. Interests are down and the bonds are up. And I don't know if that will continue. You know, if you peek back to a weekly chart, bonds are at a high point, you know, which has kept interest rates low. If you believe what the Fed is saying, that they're going to raise interest rates at some point, then you would expect the bond market to settle back in and turn around. I'll be watching that from an investor standpoint, not necessarily from a trader's standpoint. Let's look at the currency markets. Dollar flattening off the high, euro in here. Matt's Forex report was really good. The yen is sitting on support down here. These are indexes against these major currencies. The pound is bearish, Swiss franc is bearish, Canadian dollar bearish, Australian dollar flat. This one, I can't remember what the swap rate is on the Aussie US dollar, but that could be an interesting trade. Then the New Zealand dollar is flat as well. You know, as we look around the markets, we're left with a wait-and-see approach. You know, some of the volatility from earnings might develop a pattern. I think as a trader, you got to really rely on what your vision is for your business, especially in a market condition like this, and you deal with the day-to-day of markets by applying your rules. If you haven't spent the time to develop your rules yet, that might be a good time to do that. You know, get with a coach, get with a mentor, get into the coaches shows. We have another one on Thursday evening, January 15th, for all of you rookie and pro members. We're going to be doing that at 8:30 p.m. Eastern Time. All 4 coaches will be there live and talking about expiration. We call that our expiration party, which is an exciting thing. All right. From TackleTrading.com, this has been Tim Justice with a quick market update for Wednesday, January 14th.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.